Righty, yo, good evening everyone. Welcome to the call. Let's get into it. So cool to see all your names and hopefully see a bunch of your faces on Saturday. That is what I'm pumped about right now. So yeah, what is happening? So Tuesday night, guys, here we are. We've got Mike with us as well, and we will dive into some stuff on the charts in a minute. But before that, guys, this Saturday, we have not done a live event for months. Like, I mean months. So, oh, anyone else got no sound? Selena, really? Can you all hear me? Drop a one in the chat if you can hear me. Now you got me wondering. There was music. Yep, got sound. Thank you. Okay. Selena, you might have your volume down. There, you like gave me a fright for a second. But yeah, guys, so this Saturday, live event in Auckland. Really stoked to hear so many people are driving up from Tauranga and Taupo and the Coromandel and all over the place. And so really pumped. Someone today told me that they were originally flying to Australia on Thursday. And after having a chat with me on the weekend, they're actually in the process of signing up, but they're changing their entire flight to Australia to be able to come on Saturday. So just absolutely blown away at the excitement and expectation for this weekend. So yeah, guys, if you haven't already, make some plans, get up here. It's going to be so fun. I am keen to know who, like, obviously we're launching at 7:30 and we'll be there a little bit early, but I'm keen to know if anyone's keen to hang out a little bit extra early, like maybe 6:30, if guys are just, if you guys are keen. I'm so excited to be able to spend time with some of you guys. I know some of you are driving a long distance. Some of you might only just get there in time, but yeah, just so pumped at the idea of being able to have some FaceTime, have some hangout time, aside from obviously some of the time where Mike's going to be teaching and whatnot. But just to lay it down, I've had a couple of questions. I want to make it super clear on what the night's going to be about and what it's not going to be about. So for instance, what it will not be is I'm not going to be showing any slides or anything about IM Academy. This is not a presentation evening. This isn't showing people TLX and etc. We've already got a plan in place for Tuesday night. The way we'll end, like the idea for the Saturday is just an absolute value dump. We just want it to be a cool experience for our community coming together, number one, and number two, for our friends and guests coming along. They have an awesome opportunity to hear about what the heck it looks like to start thinking about the world of finance differently, to think about not just investing, but also trading and how different they actually are with compound interest. But really the biggest story there is the compound effect in our lives of just what does it look like to have a mindset where we're embracing, improving our lives 1% every day, the little habits that we have, etc. And so that's the goal for Saturday night, is just to create an amazing opportunity for our community and for others coming in to see us and experience what it is we're all about, and for them to leave with the belief that anybody really can do this. And so, yeah, like I said, not going to be showing any slides, but we'll end the night simply with, guys, if you want to know more about what we're up to and how to get plugged in, then join us on Tuesday night, because we're going to show a full presentation of what it looks like to get plugged in and the different options with that. So just want to give you complete clarity on that, so you know what Saturday night's going to be about. And then from there, if you've got guests coming that, you can just simply promote them joining us like this time a week from now on Tuesday night. So Rich, myself, and another special team member of ours is going to be giving a special presentation of what the heck we are up to. So all that being said, I am so excited for Saturday. Really going to be a lot of fun. I've still got a ton of work to do with bringing it all together, a few little digital things, and physically getting the room ready. But having said that, guys, if you are already and then will that be Tuesday in Fit Life? Yeah, Selena. So we will most likely stream the Tuesday presentation. It'll be on Zoom, and we'll most likely also probably stream it to the Facebook group as well, but we'll see. It might be better to keep it in-house on Zoom. I don't know yet. I haven't thought about that. But what was my other thing? And so, is that Tuesday night? So next week, Tuesday night, we are going to be putting on a full-on, like, proper presentation, as in what IM is and how someone can actually get plugged in, the different options. Rich is going to jump on with me and someone else in our team, and we're going to give a full overview of what's possible, and also less slide heavy and more story orientated and testimony and just the different options for someone. So on Saturday night, the goal is bring friends along, fill your car up, bring friends, invite friends, let them come and obviously experience our community and Mike teaching in person, which is a huge privilege. And then from there, we're just going to end the night with, guys, if you want to know more about our community and how you can get plugged in to do this properly, join us on Tuesday night. We're going to show you all the different options and how you can get plugged in and figure out from there what suits you best. And so between Saturday night and Tuesday, you can talk with your guests, but basically just promote them jumping on Zoom with us on Tuesday night. So that's that. Then and as well, guys, here's something I had thought of. So really want to bless people who are coming on for the first time. Obviously, almost all of us have been through what was the Bullseye Bootcamp, which no idea why I called it Bullseye, but anyway, I know Kill Shot. It's not going to be called Kill Shot when it lands on at the Academy as a scanner. So anyway, that whole bootcamp, we've got the recordings. They've always only and ever been for our team, for someone who signs up and joins and is doing this with us. But oh my goodness, I just remembered something. Forgive me. I forgot to share this link with someone that is, this is hilarious. My bad. Someone who's in the process of, if not joining tonight, there we go. My bad. There we go. But yeah, so with that, guys, wanted to take the recordings that we have, guys. There's like 15 sessions in there, right? That teaches everybody how to trade with Killshot. I want to give that special playlist to anybody who shows up on the night. So we'll have a sign-in sheet where people can put the email addresses, and then obviously all the training is loaded. Like, it's going to give someone everything they need to trade the strategy. But obviously, if they want to take it seriously, join the community and actually have the indicator, they've got to join us. But really, just showing them that if they need more information to make a decision, I want to make it as easy as possible and increase their belief to lower the bar for someone to get involved in our community. So if you've got guests coming along, if you've got someone coming, let them know they are going to get a whole heap of value, not just on the night, but after the night. They're going to have hours of content they can go through and watch and get plugged in with to really just see the value of what we're up to here. And yeah, so take that and let people know about that, because I feel like that's worth joining for in itself. But anyway, just want to really, for Saturday night, to be an absolute value dump to help people onto this journey of becoming recession proof, guys. I mean, stuff is about to get real. For those of you tracking with what was possible with AI already, it's getting crazy. So with that, I do believe a lot of jobs are not going to be around in 2 years, 3 years time, and maybe even sooner. And with that, never more important to start diversifying the skill set. So with that being said, I don't think I've got anything else to mention about Saturday or anything else, but for now, I think I'll transition to bring our legend on. But where is it on Saturday? Saturday is in Ellerslie. It is hosting it at our church in Ellerslie. So inside of the Fit Life Facebook group, guys, I've created an event. And in that event is the address, the details, everything. I'm going to even load a picture in there of a little bit more with directions so no one gets lost. But get into the Facebook group, into the event. I wonder if I can do this. I'm going to do share, copy link. I'm pasting this in the chat right now. If you click this link, guys, that'll take you straight to the Facebook event. You can copy and paste that link with anyone, and it takes them straight to the Facebook event page where they can click going. Please, guys, if you're coming, click going. If you have guests coming, get them into that thing and click going. So I know how many chairs to set up. Last time we had 40 odd say, or 30 something say they were coming, and we had 80 something show up on the night. So I'm anticipating something similar again, but it's really helpful for planning's sake to know how many are coming. So click going, get off the fence, and commit to it, and get others to do the same. And yeah, anyway, enough of that for now. But I am going to, where am I? Mike, I am going to get you on here with me so that we can get into this evening, guys. So I thought tonight, we'd yeah, keep it pretty open, pretty light, and just obviously give Mike an opportunity to share what he's seeing at the moment, what's going on in the charts, maybe answer some questions, and obviously, just, bro, so fired up to be able to, have you up here in person with us on the weekend, and I'm just pumped for you, for yourself and for everyone. There's a lot of us that haven't met in person yet, that are driving from all over the show, and so I'm just fired up, man. It's been, since October, the last time we had a live event, so I just want to say a huge thank you, first of all, to making the drive all the way out to Auckland for us, and then, yeah, we're going to be making some more announcements on Saturday night about what and when and whatever's happening next. But yeah, man, once again, just thank you so much for Saturday coming. And yeah, man, just want to give you the floor tonight. Share whatever's on your heart. Maybe if there's anything on your mind for Saturday, for people coming, or for people, or how they can maybe even share it with friends about what to expect coming along. But yeah, otherwise, man, I want to give you the floor and say thanks, and go for gold. Let's have some fun tonight.
Cool, thanks, Ty. It was actually funny because I planned to come up on the weekend, and then I was reminded it was Mother's Day on Sunday. So I was like, oh no, I'm going to have to leave first thing in the morning and drive all the way back down. And
Mother's Day on Sunday.
Sunday to make breakfast for my wife in bed or something. So it's going to be an early start, but it's going to be worth it. It's going to be amazing to see everyone, and just hear about your progress, hear about your journey, and what can you expect. I just want to try and give, like you said, as much value as I can. Different tools, different tips, different ways of looking at the market, and maybe more clear understanding of where we're going, and the bigger financial picture of things, so people can really dial in to developing the skill set and be prepared for what's coming, because there's going to be a lot of crazy stuff happening in the financial space, a lot of change. And to be ready for it, to take advantage of that opportunity, is definitely the best thing we can do. So looking at that, looking at ways we can prepare ourselves, looking at the dynamics of what that would look like, and the possibilities that are connected to those dynamics as well. So yeah, I think something like that, it's going to be fun.
So cool, man. Yeah. I know there's a few of you coming from Taupo, literally driving up and driving down.
Yeah.
I know, like,
Yeah.
I'm watching Lisa and Zeph nod at me right now too. I'm like, you guys love it.
Yeah.
I'm so pumped. It's going to be a lot of fun. It's going to be worth it. And odds are I'm going to be doing the same thing in a few weeks after. Small little hint right there. So, guys, it's going to be fun. Saturday's going to be a blast. And yeah, that'll be the only tiny little tip right there. But there's more coming, guys. Really, really excited for what's coming up. And yeah, just want to obviously bring us together, build community, and just and for us, obviously, like we do so much online like this, but to get face to face, build. I mean, what we're building here is special. Like our relationships are super real. We're on Zoom and on the phone and in chats all the time. But like for other people coming in, like there's just such a rad opportunity for those that are isolated or trading by themselves or just feel like they're a lone wolf to be a part of something so much bigger than trading. There's a growth mentality that we're going after about becoming the best version of who God created us to be, and that involves like doing life together. And so if it was up to me, we'd like hang out all weekend. But I know logistically that's a little tricky for now, but really moving towards that one day, believing that we're going to put on a proper convention that'll be a full day and a half or whatnot, and we're going to have some pretty big hitters internationally flying in for that. So we're building towards that. That's what the vision is for us, guys. We want to really establish ourselves at a strong base in the world here of not just being highly profitable traders, but people that are seriously obsessed with developing as humans, and life is improving by 1% every day. That could be parenting, family life, fitness, health, etc., and also finances. So anyway, that's I'm gonna get myself out of the way, bro. I'm gonna let you I just thought I'd hang around for a minute, but I'm gonna give it to you, and you can open up for questions or charts or whatever. So the floor is yours.
Awesome. Thanks, Ty. I actually just came back from dinner with some friends, so it was so nice to give our child to their older kids, and I'm very satisfied with chocolate tart, and oh man, so many amazing food. It was just incredible. So race back here, and I really look forward to these nights, just connecting with you guys and hearing what's going on, and hopefully sharing stuff that's valuable to you. But one thing I'd like to start with tonight, obviously I've got a trade on just now. This is a trend continuation trade. Looking at a possible turnaround, but obviously trading below the moving averages. We have a breakdown below the averages, and then we have a continuation pattern. So I'm short, could get stopped out, but it is what it is. Only going to be 15 pips. But notice how prices respected the moving averages and pulled away, respected the moving averages and pulled away. If it breaks above this high, then that could be the end of the trend. And if we look at the 16-minute chart, we are down, but we often get a false move into around the London Open, which is an hour ago, but within an hour and a half, that's when you get the turnaround. So this could get stopped out, but if it does get stopped out, then I'll look to go to the long side. So currently trending down, below the moving averages, been respected. That's the Dow. The NAS is the same. Just finding a bit of base right now, a bit of a base here, and we need to break below that in order to continue. So that's just a bit of a brief, but what I'd like to start with is, does anyone have any questions that they have about the strategy, or anything that they're really struggling with? So maybe not a technical question like lot size or leverage or something, which you can learn from the video modules, but something else they're struggling with that they haven't got any closure on, or any clarity or understanding about. If you do, obviously if you are following Jay with his sessions, you might not always get a chance to talk to him, but we can discuss those questions now. And then what we're going to do is have a look at the charts, see what's going on. So this one got stopped out. That's okay. We'll wait to see if we get a turnaround or a possible continuation down if we don't close above the averages. And notice that we have the spike low, which is where all the demand was. That's why we're looking at a possible turnaround. And that was early this morning on the back of some news. So that's why we're pausing right here. If we break through that, though, we have only two places to stop. The first is the previous spike low, just there. And then below that, we're looking at a long way down. Now, why do I say that? Well, when we see these big candles, these are big gap candles, normally on the back of news. So this was from the payroll data, the employment data on Friday. When you have these big candles, they typically move like that in, sort of 1 to 15 minutes. And because of that, there's basically a gap of any trading in this area here. Well, let me just draw that again. There's basically a gap of any actual trading. Let's just change the color on that. No, that's horrible. It's better. So in this green box, there's basically no trading. And so price can actually just fall straight through it, because that's how price, when it broke up over here, it basically just went straight up. There was no buying or selling in here. There was basically just boom, straight up. So that's why it's called a gap. And so if we hit a level like that, we tend just to pierce straight through it and then go down to the next level where we will find a bit of action. As you can see, price went sideways down here for a little bit before it exploded higher. So this is actually what we call a demand zone. This is where the buying started to come in at a very large level. I'm just going to go back to the 1 minute chart. Okay, notice that we have a turnaround. So we got that ABC push higher and then another push lower. I might look to get short again. Okay, I'm going to go short again. Stop above the high. Now, the reason I'm doing this is because we did respect the moving averages again and rejected off them. So again, this is not Jay's kill shot strategy, but this is a trend continuation strategy. See, if we come out to a 3 minute chart, here's our initial signal, and then we have the first pullback to the averages, second pullback, we now have the third pullback. Okay, so normally when we look at the end of a trend, we often have a capitulation and then a strong reversal. We haven't really seen that capitulation yet. So that could possibly take place, possibly, if we come into the lows here. Now, again, this is a much riskier trade. And that's because I'm taking it after the trend is well established. Okay, so this trend has already been running for 2 hours. So this sort of trade is much riskier. You typically want to be in the first 2 pullbacks on the moving averages. But we have a very tight stop here. And so, again, it's about 15, 16 pips. So I'm going to see if I can get in again. Now, if this does fail, then we're probably going to be looking at a turnaround. There's our trend line. And once we break above that, we will have the moving averages turning around, and we probably will get a signal on our kill shot indicator. So now, when the market corrects, so you know how the market moves in waves, the market moves down. Now, when it corrects against the predominant trend, it typically does so in 3 waves. Okay, so what does that look like? On a lower time frame, after when the market moves down, the pullback will be marked in what we call an ABC correction. Okay, and this is classic Elliott wave theory, where the market moves in 5 waves: 1, 2, 3, 4, 5. In fact, I'll just redraw that using our correct tool. 1, 2, 3, 4, 5. Okay, this is the basic structure of the market. Now, after we move 5 waves in one direction, we then typically get a correction, A, B, C. That's the standard structure of any market. And then either we get a reversal from here, or we get a continuation, excuse me, into a fresh 1, 2, 3, 4, 5. So each correction, for example, if we look at these corrections here, wave 2 and wave 4 are corrections against the dominant trend, which is down. So wave 2 and wave 4 in themselves will often have an ABC correction, three waves, 1, 2, 3. So if we look at this here, you'll see 1, 2, 3, and then a continuation down. If you look at the next one, you'll see 1, 2, 3, and then a continuation down. And this one here, this one, it does 1, 2, 3, but actually it does the first one that I got stopped out of, and then it's done another one. So sometimes these are called complex triangles. It's not really important what they're called, but basically means that you get a false break higher and then the continuation down again. What's important is that it has still respected the moving averages and rejected it. But the point is, you often get a 3-wave correction against the dominant trend. And we can actually see this on any time frame. Let me just, then we're going to come to the questions. Move this over here, move that over there. All right. So for example, here we get a big run up, and then we get, this one's a bit more complex, but you should see, after you see the high, you should make at least 3 pullbacks. So we've got our first 1, 2, 3, and normally that's where we buy. This one also did a false break below and then came up again. So obviously the safest place to join the trend is after you get a trend line break. That's normally the safest place. Now what we've got here is we are just about to start the trend line break here, but the early entry was the close below the moving averages. So that candle that I've circled, after we've broken up below the moving averages, we've come down and closed below both of them. For me, that's my early entry, and now I'm into the market slightly before the trend line break. The more conservative entry is when this candle, if it closes below the trend line. But basically, that's what a typical correction will look like. And again, it will have this sort of channel pattern. The most important thing to determine if the trend will continue is if the trend line, if the moving averages are still being respected. So let's just watch that, and I'm just going to look at the questions here. Okay, just give me 1 second. NAS is breaking down nicely. Okay, lots of questions. Let me just make this bigger. Oh my goodness. Yes, Kathy, I did get the left side of the screen back. It's working. Actually, it was working today, and it's come back again. So I'm not sure. It was working earlier today. I'm not sure what happened. I thought, oh, it's fixed. And then it disappeared. Okay, setting appropriate losses. Okay, so Marie, it's really important to follow Jay's parameters around stop losses, because the strategy has been back tested for multiple years, and the stop losses that he encourages to use are valid. He normally says that he encourages 25 pips minimum, especially if you trade the Dow, 25 to 50, and going for 2 to 1. Again, if you are able to get a stop loss above market structure, so for me, this particular trade, I might get stopped out, but notice that my stop loss is above the market structure, which is the high of the candle, and it's above both the moving averages. Okay, so everything is in my favor. If the 238 moving average was lower, then I would have all 3 moving averages and the swing high protecting my stop. Okay, that's a lot better. Every situation is different, but you know, normally Jay would say a standard 25 pip stop, but you might not need that. Okay, if you have, for example, if you have a strong trend and you have 3 or 4 points where your stop is protected, you might not need that. So maybe you could put in the chat, what is your average stop loss size, and then we can have a look at that. And let me just drink a glass of water, because I think that that ice cream is just starting to clog up my throat, and the chocolate tart, of course. Hang on a second. let alone the passion fruit pavlova. Okay. Okay, Zeph, you have a question on stop hunts. Okay. Oh, and the Argentinian Malbec as well. Okay, stop hunts. All right, I'm just gonna like to know how to stop this. I'd just like to know how bring the stop loss up into profit affects my reward to risk. If I make it 2-to-1. Okay, so basically, Lisa, if you have your stop loss, let's say there's my stop and here's my 2-to-1 around there. So the moment the trade goes open the trade, I have the possibility of losing let's say 20 pips. I'm making 40 about there. The moment price moves significantly in my favor, I bring my stop loss down to break even. I now have 100% profit. It doesn't affect your risk ratio at all, because initially from the outset of the trade, you do have risk on the table. Okay, so the moment you enter the trade, you have risk. It's just minimized over time. So over time, it doesn't actually affect your risk reward ratio at all. You do have risk on the table every time you enter a trade. Okay, so but obviously once you move to break even, there is now no risk, but there was initially. Hope that answers your question.
Mike, I'm not sure if you're busy talking, but I can't hear you. Not sure if anyone else can. I don't know if your mic just died or if you muted by accident.
Okay,
There you
we're
go. You're
back.
back. You're back.
Unbelievable. Who did that? Okay, sorry. So missed that. Okay, I can't remember where I was, but the question was about Jay with the openings. Did you guys hear my answer about the risk reward? Yeah, you did. Okay. So Jay with the openings. So obviously there's a lot more risk trading the openings simply because of the volatility. But once the dust is cleared, that's when the trend presents itself. Okay. So for example, this morning wasn't the best example because we trended before the open. And we were in a consolidation. If we go back to previous day, the same thing happened. So we had the news on the open, and then we had, here's all the volatility. And then after the volatility, then we had the sell signal, and then we had the trade. Okay, so that's why, yes, you do have opportunities at the open, but because there's so much happening, there's so much participation, which can give you false traps and all sorts of things. That's why Jay encourages us not to trade the open, but to wait for the trend to reveal itself. So that's a really, really important point. If we go back to the previous day, we can see the same thing. So for example, the open is right here. And then now notice that there's no trade for quite a while. Okay. That's because price is basically going up, down, up, down, up, down, up. It's not clear, but then once the trend continues, we get the final reversal, then it tells us that it wants to continue the downtrend. So this is much clearer than waiting in here. Obviously, we wouldn't trade this because it's in a downtrend, and we're trading right into the resistance on this side over here. So I would encourage you, if you can, to wait for the trend to show itself and not trade the open. Obviously, the reason we do that in London is not only because it's a great opportunity to demonstrate the strategy, and because it's the time when people are available, but I always do qualify the trading, saying this is a much riskier time to trade. Okay, so, but you can do it. I get all of my opportunities in the morning from 5 to 8 a.m. That's when, I mean, I don't get up in the middle of the night. That's, yeah, not anymore. That's where I get, there's always a trade every day. And in fact, there's a minimum of 2 trades every morning. Excellent trades from 5 to 8. So I'm not sure what other people are doing, but maybe you can share in the chat when you're getting good opportunities so that Jacques can see. Joel is struggling to identify the start of a trade. I see the buy signal, but I notice that not trustworthy ones. I wait and wait and then I've missed it. Okay, so Joel, the best trades, the ones that come out of consolidation when you get the start of a trend. Okay, so here's an example back here. This is the Dow earlier tonight. So as you can see, there's a lot of buy and sell signals here, but we're not looking at any of them because we're nowhere near London Open. If you are going to trade the Open, you can trade it just as long as you realize what's going on. So let's have a look. We can see there is strong resistance there. Okay, strong resistance. And what we can see is we're in a current downtrend. If we put the indicator on, we're in a downtrend, and this is actually a correction against the dominant trend. But you can see that we're clearly finding resistance at that level. Okay, very clear resistance. We're bouncing up the ceiling. So at that point, I'm only going to look for short trades. Okay, so what I want to do is I want to wait until price has broken out of this consolidation, and then I'm going to look for a signal. I need to see a break of this consolidation. And one of the rules for entering the trade, remember, is a break, confirmation of resistance or support that's broken. So what we have here is we then have a super trade. So we reject for a final third time at the top. The 20 and 50 cross the 238. We also have a break of a trend line. We also have a break of the previous support in this red line. Okay, so we've made the break, we've broken down. Then price comes back, touches the moving average. There's your entry, and there's your trade. So that trade until now is netted about 60 pips. So the best trades, Joel, is waiting for the trend to reveal itself. Okay, rather than getting chopped up here, again, you don't want to trade this time, it's the wrong time. You can trade just before the open if you like, but wait for the break of the pattern. That's where the high probability trades are. Okay, I'm just going to clear my throat, have a bit more water. Okay, I trust that makes sense. Let's look at the trade from this morning after the open. So if you're trading the open, opens back here. Buy signal, no, because we're trading into this resistance and we're below the 238. We want the sell signal. There's our sell signal right there. Bang. There's your trade. A very, very simple maxim to live by in trading is if it's not clear, don't trade it. If you don't understand it, don't trade it. So that's why it's really important to hone in following the rules. And then once the conditions present themselves, then you're in the trade. Okay. In fact, let's go have a look at the, okay, trades breaking down nicely for us. We're up 10 pips. Okay, now we might bounce off this support.
Let's see what happens. My stop is above the high. I might just bring it down a bit. No. So bring it down just to above the 50 moving average, just in case it wicks up. It's only 5 ticks stop, so four pips, so very, very small. Let's leave that there. So let's have a look at the NASDAQ, and let's have a look at a good example of that today. So let's move out and just pretend that, just pretend this is a 1-minute chart. Okay, so the chart on the right is a 1-minute chart. What do we see? Okay, well, if we zoom out, we see previous resistance in the past, and look at that. We've now produced a double top at that same resistance. What happens after the double top? Well, it's one of the conditions that we look for a trade. Then after the double top, that signifies a possible rejection. We're then looking for the signal. There it is there, and we're short. Okay, so follow the conditions: double top, double bottom, triple bottom, broken resistance of support, break of consolidation, break of a pattern. These are the things that you want to see happen before you look for the signal. And here's our signal here. If this was a 1-minute chart, then we can have a trade on from here. Okay, I hope that helps. Excuse me. Hey, Elaine with the POC. Do you still do normal 6 hours? Yes, that's correct, Elaine, because it's 6 hours of trading. So even though the market's closed, it's still just 6 hours of pure trading. So when the market is closed for that hour, there's no price action reflected on the chart. So it's not really important. So yes, it's exactly the same. Okay, so the engulfing candle, Selena, it's definitely like the highest probability trades on the continuation of a trend are the first 2 pullbacks. After that, the probability decreases quite a lot because at some point the trend is going to turn around. So if we come to earlier today, and let's just remove some of these lines. Okay, so here's the breakdown of the market earlier today. So the trend really begins to get underway about here. That's when it breaks down. So here's our first pullback, second pullback. This is a part of that one. And then the trend ends. So if you sold this one here, you're basically selling into the floor. So obviously, the earlier ones are much better. Typically, you don't want to take anything after 2. The only reason that I got into this one now, we're at 15 ticks on this, is because we are much closer to, we're pushing into this low where the supply is, and we should get some sort of pause from there. So 16 pips. And the NAS is breaking down as well. I also have a short trade on the NAS. That's up 15. All right, 23. I'm going to take that out. Boom. And then the NAS. So let's see what happens at this level, because just below it is our next level. That's where all the strong demand was. So after the employment data, this is where price reverted to before it absolutely exploded to the upside. So somewhere in this area, we probably should see some sort of pause or reversal. But let's see. I mean, if there's still a lot of fear around the banks failing, because they're still failing, if there is a lot of fear to begin the week, then this price could go straight through this. But this is definitely a place we're not looking to sell into once we get into this area. Okay, we are looking for the price to turn around and a possible buy option. So that's what we're looking at there. So that's how I prefer to trade the trend, is trade the initial signal after the break of consolidation. So the point in all of this is let the trend reveal itself. Then you're not guessing. Then you know that you should be selling or buying, but you need to see the trend underway first, and then get the pullback. And it's the first and second pullbacks if you are going to enter on a continuation of the trend. Now remember, it's not guaranteed this trend is going to continue very far. That's why the signal, the crossover of the averages, is the best trade, because you get the first wave down. That's why it's so good. Okay. So Marie, you can set the POC over the weekend data as well, because remember, there are people who hold their positions over the weekend, and so the prices that the prices where the price passed through prior to the weekend are still valid places for buyers and sellers. They still hold weight in the market. So there were places that were significant. So the POC does still relate to Friday's prices. Okay, that's a very good question. Joel, how do I approach star chasers? So I don't tend to use them too much, because I just want to get 30 to 35 pips a day. And often, because I'll take good trades, they normally give them to me. So for example here, if we just put the star on, so here's our star over here. We have a green one. You can't see it because it's covered by all this other green stuff, but there's a green star right there. I don't tend to use them that much, because you only tend to need them if you're holding for much bigger moves. But definitely the way that I have approached them in the past is, if you see the star, start trailing your stop. Okay, so it has to be at least break-even position or more, but definitely start trailing it. However, if you have a star like this that's coming into area of support, then absolutely you should listen to it a lot more. Okay, because you could be coming to an end. So I could have squeezed more out of this trade, but I only need 30 pips for the day. So looks like some nice fear coming to the market. We've got this trade on the right. So notice on the NAS, I just pulled my stop to below break even. Okay, so I'm trailing my stop down in case we get a violent move up. Now, we don't know if we're going to get that, but notice that I've placed my stop just above this area here. That was the last place where price rejected very strongly. Okay, so that's where my stop is. Let's just jump out to the higher time frame and see what we're bouncing off. Okay, it's time to take profit, because we're coming into this big wick. Okay, this is a demand zone. I'm going to take out all my profit, 22 pips, and we're done there. And we might see some sort of a bounce from there now. And that's all we need. We don't need to get the rest. We don't need the whole day. That's all we need. And then sure enough, there's our correction, and we'll jump back up. Let's just go out to a 60-minute chart. Okay, so I was at the chart this morning where we had all this buying. Look at this huge wick. Okay, so indicates a lot of buying, and it originated at the bottom there, and that's why we're probably going to pause and turn around up for a nice correction. And the next important place is obviously the low of the day. Those are the places we're looking at. We should get some sort of a move up from here. And let's just put in a very, very small position and see what happens. Let's see if we get a bounce up from here. Okay. And so, Joel, that's how I approach star chasers. I only, you know, so for example, this one here, it's produced a star. I think you can see that. Here's our star here. And, you know, if we get a bullish engulfing above here, then that could tell us absolutely this is a great place to buy. It's a reversal candle. So we can put in a small position there. See what happens. Close above this candle. We're up 3 pips on the NAS. And we'll basically put the stop below the bottom of that candle. And again, we were looking for price to reject somewhere in this box. We said that already. And this could be the place. We're coming right down to that buying zone. Now remember, it's not just one price, it's actually a zone. We want to be aware of that. So I want to see a break above the top of this red candle. I want to see a price close above that in order for me to get in. Okay, thanks for that drive, Ty. That's awesome. About the stop loss, Johnny, is it legitimate to trade from red green stars during a clear consolidation period? Yes, you can. If you have a clear consolidation, then the stars will actually tell you the top and the bottom of the range. So absolutely, you can do that, Johnny. Yep. Obviously, trading from a range is very, very simple. You just trade from the floor to the ceiling and the ceiling to the floor. And the stars help you to identify that. So, yeah. Okay. Okay, is the mic still bad? Can you guys hear me okay? Am I clear?
You're good on me, bro. It sounds great here.
Brilliant. Okay. Yeah, so Jay recommends not to trade the end of London. Absolutely. Okay, now we're gonna, sorry, I've just seen we're gonna look for a trade here. I'm just gonna go long here. Stop below the low. Take profit up. So at the end of London, that's when all the players are exiting their positions for the day. So often that's why you see a reversal in New Zealand around that time. So let's just remove the drawings and have a look at this morning. And you will see so when we made the big push down, actually end of London, that's actually earlier. Somewhere in here, I can't remember. I'm not actually trading the end of London. It's a bit earlier for me. So I think it's 4 a.m. or something. I'm getting up to 5. Yeah, so basically whatever the market's doing at that time, you can actually just do the opposite and you'll make money. So if it's going down at London, it'll start to go up. If it's going up at London, it'll start the close of London. So 4:35 p.m. London time, it'll start going up. So basically trade the opposite of the trend. Yeah, I think 4 a.m. is London close, I think. Okay, Selena's been having good results in those couple of hours in the evenings. Yep, brilliant work, Selena. Okay, yes, so stop hunts. Yep, sorry. So coming back to stop hunts. So the stop hunts are very, very, so here we go, up 3 pips on the NAS, moving up on the Dow. So stop hunts, they will always be around levels that are very, very clear places where people would put stops. Okay, so let's go and have a look at that. Let's remove this out of the way. Let's look at the NAS. They will always be obvious places where you would put a stop. Now, why would you put a stop somewhere? Simply because it looks like a strong area. Okay, so we had a beautiful stop hunt this morning. And why is that? It's because we had this clearly defined ceiling. Now, this is going back to the 1st of May, and then we again touched it on Friday. So that is a very, very strong ceiling. You can see that price has tried very hard to get through that level without success. So people think, hey, that's a strong level. What I'll do is I'll sell and I'll put my stop above there. So that's an obvious level where there's going to be stops. So, so what happened? Well, we came up and took all the stops out. And then we took the market lower. So here's the stop hunt here. Notice it was after the big run up, big buying. And then we've sold off ever since. So stop hunt areas, the big ones, like this one, is normally an obvious place. But we get stop hunts all day, actually, on lower time frames. They're a lot harder to see. But basically, to swing high or swing low, that price will zoom above, get all the stops in reverse. So for example, let's just remove these lines. Here's one right here. Okay, this is a stop hunt. It's taking out all the stops above here and all the stops above here. And then it reverses down. Okay, then this is a stop hunt because it's taking out all the stops above this level and then reversing the market down. Okay, so we get stop hunts all day. Here's another one. Some of them are very, very subtle. That's a stop hunt. It makes the primary low, then it makes a double bottom. Now, often what we call a double bottom is actually a stop hunt, and then you get the reversal. Okay, so two sorts, Zeph. Some of the first one is extremely clear to see where people would be putting their stops. The other one is basically a swing high where you get a reversal off, which is what we call a double bottom, and then a move upwards. I mean, they're all three. Once you start seeing them, you can't unsee them. Here's a great one here. After a sell-off, we make a primary high. We pull down. Okay, if you are selling here, you have to think like the banks. If you're selling, if I was a retailer, where would I be putting my stop? Well, I'll be putting it above the high where it's protected by market structure. So where's the best place to sell from? The stop hunt. Look at that. Now, one of the clearest characteristics of a stop hunt is a strong, rapid move. So with one candle, we spike into that zone, liquidate all the stops, and then just smash the market down for the rest of the day. So for 160 pips. So the stop hunt is actually the best possible entry you can ever get in the market. It's the -- entry. If you can learn to master stop hunts, I mean, obviously master the strategy that we're using now, but along the journey, learn to identify that we do make these double tops or double bottoms, where the secondary high or low will be the manipulation of price to trap traders into going in the opposite direction and then reversing the market. Because if you watch the market do this, this is what it looked like in real time. So, boom. Now, if you see that, you are seeing, oh man, we've now closed above the moving averages. The moving averages have turned around. We're going higher. We're going to break this level. But the fact that it's a sharp, sudden move is very, very indicative and characteristic of a manipulation of the market by larger players to induce you into going long, take out all the stops, and then reverse the market down. Okay, so those are the key points. The key points. Yeah, so keep focusing on those things. Learn to recognize them. Look out for them. You'll see them over and over and over. Okay, so interesting point. We had our We entered after we broke above the high of the red candle, slightly late on this position. This is on the Dow. Notice that we've failed to make 2 lower lows. Okay, so we've made our low, higher low at this stage. What we need to see now to confirm we're possibly turning around is a break of that high. At that point, we can actually start bringing up our stop loss below that secondary higher low. So let's see what happens. This is just a small position, just to play around with a reversal. And again, this is just to play around with the reversal. Okay, so it's a tiny position. Again, it's a reversal trade, much riskier than a trend trade. Obviously, the better trade is to wait for the moving averages to cross over, and then we look for the trade. But this is just a very, very tiny trade, just to see what it's going to look like, because we are anticipating some sort of possible reversal from this area. So we want to see what's going to happen here. Okay, 30-minute candle in US closed, looking pretty bearish still. All right, 30-minute candle. Let's have a look at that.
Sorry, Mike, that was a while ago.
All right. Okay, that was the one before.
That was 14 minutes ago.
Gotcha.
We're good. We're good.
Okay. So you can see how we've come right into that low and we've paused. We haven't gone any further because that's where all the buying is. That's where all the buying was on Friday. There was a massive spike up from that level. Price went up 78 pips in half an hour. So this is what we call a demand zone. You definitely do not want to be selling into one of these spikes. Okay, you only want to be looking for a buy, if anything. Or you want to wait until that level is cleared, and then you can look for a sell if you want to. So, so with ticks, as you can see, it's different between the Dow and the NASDAQ. Basically, all you have to worry about is the first 2 numbers. So 30 ticks equals 30 pips on the Dow. 2,682 ticks on the NASDAQ is 26 pips. So just worry about the first 2 numbers. If it's a four number number. If it's 3, then it's the first one. So this one would be 7 pips. If it's 3 numbers, it's 3 digits. But if it's 4 digits, the first 2 are the most important, 27, and then 30 is 30. Okay. So Kelly, your question, is that how you take some of the profit, or just close part of it? It depends on what platform I'm on. This one I closed the entire position, just because I didn't need to hold it for longer. Yeah, so basically, Maria, the long wicks simply indicate a lot of buying or a lot of selling. And so if you look at, if we draw it pictographically, let's say this is price, and price goes up like this, that tells us the buyers are pushing the price up. But then if it goes like this is telling us that the buyers were unable to sustain these levels, and the sellers were much more powerful. This is what price would look like on a line graph. But on a candle, if the candle opened here and then closed here, on a candle, it would look like this. Okay, so big long wick means the buyers pushed the price up, but they were not able to sustain that move. The sellers overpowered them and pushed it down. So when you see a wick that's 2 to 3 times the size of the body, that indicates the power of the buyers or sellers at that particular place in the market. Okay. Okay, so the MACD, we are going to spend more time in the future on this, because there's a lot of different nuances to it that are super helpful to look at. But it briefly, I'll touch on it again and give an example. I just shared before this key level on the NASDAQ. where we had the stop hunt. Okay, so clear level here that was respected and then violated, but I actually sold that stop hunt, and there's a reason why we know it was a stop hunt, and that's because we had divergence when we came into that. Okay, so here's the MACD. What you can see is that we have a higher high in price and a corresponding lower high on the MACD, which is a momentum indicator. So that indicates that even though buyers are willing to bid the market up, the averages between the price and moving average, there's a formula that is worked out to show this indicator, tells us that this move up is not sustainable. So there's a discrepancy between the action of the indicator and the price. There's a diverging opinion. There's a disagreement. So often, and this will help you, is if the reason why we know this is a stop hunt and this move up will not be sustained is because the momentum indicator is very weak, shown by the divergence. And that's why we can just sell up here and just let the thing roll over. Okay. I'll get into it at another stage, Lisa, to hopefully give some clearer education around it. But if you just put the standard, and that's why we're getting the move up now, because we've got divergence at the bottom. If you put a standard MACD on with the standard settings, don't change it, and just watch it, you will see that at the top and bottom of the market, you will get these divergences. It tells you that the momentum of that trend is coming to an end. That's basically all it's telling you. The momentum is running out. So if we put one on here, not yet. It does not always happen at the end of the trend, but often it does. We might get one more possible push down here, and then a push higher, but nothing on the Dow to this point. How does a young trader avoid stop hunts? So you should never be, okay, no, that's a great question. You should never buy the breakout at one of those levels, is what I would say. So if you have one of these levels that's very, very strong, in order for this level to really be confirmed as broken, price needs to break higher, then come back and retest it, hold it, and move up higher. Now, on the indicator that we use, this is the point where we will get our buy signal after the moving averages cross over. Okay, so price will have broken up, pull back, we will get a confirmation, and that can be our buy signal. But you can't just buy if price breaks the level. You need some sort of confirmation. Just because it breaks the level is not enough. It actually has to really break the level and confirm it, and that confirmation will take place by the close of a candle and the moving averages crossing over. So that's how you can avoid it. So for example, if price has done this and you see this really clear level and you're like, man, and price is coming up, and you think, man, it's going to break out and I'm going to buy and it's just going to explode to the moon. And what happens is price breaks and you're like, yeah, I'm going to buy. And then it just goes bang. You're like, well, you were just the victim of a stop hunt. Okay, so you have to wait for the breakout, wait for the comeback, let price retest that level. It will also, with a high degree of probability, retest the moving averages, and then it will pull away above the moving averages. That's when you can get into the trade with a stop. And obviously your stop's never going to be down here or down here, because if it does spike down, your history. Okay. All right, so we're moving up. We've got 10 pips on the Dow, and we've got 5 pips on the NAS. So this is the reversal trade, and that's because we went down to that into that buy zone. Okay, so as you can see here, we have a low, and we have a higher low, and then another one. Failed to break below it. Price moves up. We could take out 10 pips there, but let's just see what happens. The hourly bar closes in 7 minutes, but let's look at the 15-minute bar. It's a bullish engulfing. 30-minute bar will be a wick, and the 60-minute bar will also be a small wick. Okay, so we could get a nice move up from here potentially. So let's just hold on to this, watch how this plays out. It might also give us our kill shot trade once the moving averages cross over. All right, man, I got to the end of those questions. That's amazing. And an hour just vanishes. That's incredible. All right, let's just hang around for until 9 o'clock for the next 6 minutes. If you have any other questions, just put them in now. Let's see if we get a push above these moving averages. But one of the key points maybe from this session is looking out for these sessions where price is going to stop. Okay, the big wicks, that's where the buying is. And as you can see, we went through the first one and came to the second one. So it was sort of like this zone where there was 2 of them. You never ever want to be selling into that region. You only want to be buying. Or once price breaks this level very strongly, that's when you can start selling. Okay, but never sell into it. Super dangerous. Yeah. All right. The other question, where come back here. 1 minute chart. Where will it go? Well, I'll go to a 60-minute chart. We're below the moving averages. This is a standard pullback after a big run up. You normally get a nice pullback. And once again, notice that we've had a 2-wave pullback with an ABC pattern. I'll just draw that for you. So we get the top, 1, 2, 3. So we've got our double pullback. This could be the bottom, potentially. But again, because we're trading off a 1-minute chart, it doesn't really matter. But I think could be the bottom. If it's not, it's going to go a lot lower because, again, we've come into that zone. And if we break through that zone, remember we talked about this big gap here. If we don't hold this level, we might not, then we could actually just go straight down through this gap potentially. But remember, a lot of the price action that takes place in London is often reversed in New York. And that's often why the move down in London is the false move first. So we could see some consolidation at the lows. I mean, anything can happen. It could go straight up. It could just go sideways until New York and then do a false move and then go up. So we really don't know. On the higher time frame, it looks like we are possibly basing here for now. But the great thing about trading 1-minute chart is that you don't have to know all of that, because we only need 30, 40 pips a day. That's all we need. In fact, I used to work for a prop trading firm in Auckland. And when I came in and they shared with me their process, they said, Michael, we just need you to get us 10 pips every day. That's it. And I said, yeah, I understand why, because all you have to do is put, $1,000 or $10,000 in 10 pips and you've got 100 grand. So you only need a certain amount of pips every day. And that's why 1-minute charts are so amazing. So we don't need to hold forever. We just need consistently to take money out of the market. Lisa, when you're looking for the areas where price is going to stop, what time are you looking at? Okay, so on a higher time frame, I'm always looking at a 60-minute chart. That gives me context. And if I look at this 60-minute chart, I can see we've had a strong move up. And if we just remove the indicator and remove all these drawings, we can actually see that there is a zone here that price has respected over and over and over. Okay. Can you see this? It rejected here on the 2nd of May. It rejected the same zone on the 4th of May. It rejected here again on the 5th of May. and it's now rejecting again. Okay, and then every so often it just spikes through the level. Boom, boom. So that's what I'm saying. If we don't hold this level, it'll just spike through the same way it did here and the same way it did here. So really, the 60-minute chart is good for me. It gives me context. And then I'll briefly have a look at the 15, but the 60-minute chart is enough. So this is the level that we're either going to hold or we are going to possibly break down. Okay. Hourly candle coming up in 40 seconds. The 50-minute candle will be not quite bullish unless it changes. 30-minute candle, small wick, or good size wick. That's a nice wick. If we close higher than that, we could get a nice bounce. And if you get a strong wick, typically you look for a move at least half the size up the previous move down. So this is the move down. So if we get a nice wick, often a reverse would bring us somewhere into the middle of that range. And that's purely based on retracements, normal retracement theory. So you can put a retracement on here. If you come up the top left-hand corner and pick fib retracement, and you click the previous swing high, and if you drag it down to the low, often price will come up into the 0.5 region, which is the 50% retracement. 50 to 61.8. That's called the sweet spot right in there. That's typically where price will come to. So there's our nice wick on a 30-minute candle. And sure enough, there's our rejection. There's our further push up. So I'm not going to confuse you, but Fibonacci retracement is the center of all nature. It's the golden ratio. It's what all maths is based off. And it's also used in the markets too. The 60-minute candle, bit of a wick. 30-minute candle is a lot better. That's a nice wick there. The moving averages now have turned sideways and up. And if you look at the price action at this point, notice how higher low, higher low, higher low. Okay, so that tells us that we are potentially turning around. And if you put a little line on them, it's got this nice sort of rounding pattern. So that's normally bullish at the end of a trend, but let's see what happens. We need their moving averages to cross over before we get a signal. And if we do get a crossover, because we have a signal at this support, then there could be a very, very nice trade. And that trade would definitely take us up into this region here, which is where the previous resistance was. And from where we are now, that's a nice 35, 40 pips. So I'm going to leave that there for the day. It's 9 o'clock. It's time for everyone to go and enjoy their families, at least you're trading. I can close that out for 4 pips. Close that up for 5. And thanks everyone for joining us. And I can't wait to see those of you who are coming in person in Auckland on Saturday. It's going to be amazing. We're going to have a lot of fun. And hopefully I can provide some more value there, get a chance to chat with you face to face, have a lot of fun, and get excited about the future. So thanks for everyone for tonight. Make sure you bring all your friends on Saturday so they can actually see what we're doing and get as excited as you are. So thanks, Ty.
I was on mute. Gotta love it. Right, thank you so much. So pumped. That was brilliant. I've got so many notes here. I just love how we went with question. Great questions, guys. Really, really cool. So cool to just, I know if you didn't ask the question, you still got value from the answer, and just so cool to get that over and over again, man. Really appreciate it. So fun to see how things are moving around. And yeah, Saturday, guys. Here's a thought. Didn't think about sharing this, but for those of us, look, for those of you, depending, where's this picture? I might drop this in the team chat. I don't know if you've seen it before, but just like Jay's schedule, because he's on all the different academies, right? I'll hold it there. Hopefully that's clear-ish. But you can kind of see there, he's on obviously 5 days a week on TBX, 3 days a week on FRX, and 2 days a week on DCX. So obviously the core of his strategy is taught in TBX, and he's live at midnight, 5 nights a week. And for some of us, I know we're on, like I know Zeph and Lisa, you guys are on there all the time. I'm on there a few times, but I'm honestly, I'm up at 5 a.m. pretty much every morning. So I'm thinking about personally even jumping back into Forex, because I can just tune into him live on there 3 mornings a week. Slight variation to his strategy. He focuses more on a 5-minute chart than a 1. But if you already know the gist of it, it's just going to be, it's still him live breaking down charts. So if you're wanting to, guys, I just wanted to reiterate that. If you weren't aware of his schedule, there's the opportunity there. You can month to month, you can swap between academies, or if you've got Empowered, obviously you can have a couple. But yeah, and for those of you that are contemplating even doing it in a crypto side of things, it looks like Killshot is absolutely exploding on crypto. So another option there, if you want to learn it in a different environment, all those options. So if you want more questions about that, hit me up about it. Otherwise, just wanted to remind you of those options that he's teaching like live 10 times a week, guys. Like, we're really blessed for that. So anyway, enough waffling from me. Really excited to see you guys on Saturday. Yeah, make some calls, tell some friends. Like, obviously, guys, the more momentum, the more people we can get into this thing, the more events we will do. So for Mike to drive all this way, I'd love to do these often, but yeah, that's up to us to pack the room out. So anyway, hope you guys are good with that. Can't wait to see you on Saturday. And for our international family, guys, just want to say love and appreciate you all so much. I know we're in like 11 different countries so far, guys, so it's for us in New Zealand, obviously we're hanging out in person. The rest of you, start getting your eyes on Croatia in September. That is our big academy event happening. That convention is going to be absolutely lit up on fire. They've already pre-sold 4,000 tickets, and they have not even started advertising it. They're expecting around 13,000+, guys. So I've got my eyes on that. Croatia in September. The actual dates are on my calendar. It is the 7th to the 10th of September. So have that in the back of your minds. That is going to be an incredible opportunity for us to all get over there. But besides that, I'll leave it there. I'll chuck a song on, and yeah, looking forward to see you all on Saturdays, guys. So enjoy the rest of your evening. Trade safe, and we'll see you soon. Sweet. Good night, everyone.